Hey everybody, welcome back. Well, another wild day out there to say the least. I think the best thing that we can do is outline what happened on Friday and what happened today. I really want to take a look at it from a technical standpoint more than anything because I think that that's where we should start, where I could add the most value so you have a game plan for tomorrow. The very first thing that I would say is that we held this level on the ES, and we're all aware that we held that level on the ES, and it is what it is. That's actually a pretty big level for it. And we did hold, so we should be happy with it. It's this bar that becomes the problem. So what I'm going to do, because the majority of people don't trade futures, but let's just look at what the S&P actually did today, and then we can start getting into why this is problematic. And I think it's problematic for the bulls. I do think that there can be follow through. I'm going to just state that, but these kinds of moves are very problematic, and I'll explain why. So you go home and you have this huge down bar, which clearly indicates that you have massive selling on Friday. And so they dump the market. The market holds that level. No one in their right mind is looking at that chart and saying, I have to get in. So what happens the next day? You have all these people that have their short positions on, and then they come into this. So let's just walk through exactly what happened, because a lot of people are going to be out there saying, oh, they had a great day or they killed it today. But you have to really look at this. 1.2% of that entire move was gone off the open. And now this is where it gets super interesting. If that is 1.2% from the open, if you take a look from there to the previous close, what were you up? Well, from there, you were up 40 basis points. So everyone's going to look at the market and say, oh, we were up 2% today. But from open to close, if you bought the market, you were up a whopping 40 basis points. Now, this is where it gets really interesting. If we drop down into this and look at it on a 1-minute basis, and we just do the simplest of things and say, all right, well, we're going to do a 1-minute orb trade, meaning once it gaps up over a 1-minute orb and closes, then we're going to buy it, right? So if you take a look at that and you take that part out of it, you lost another 5 basis points on that move. The most that you're making buying a 1-minute orb today, if you didn't honor your stop that was down here, the most that you were making today was about 30 basis points on this trade. So you had to hold over the weekend. I held up a strangle over the weekend and it did quite well, but this is where people are going to get torn up. And I just want to show you this so that you can see it when you start looking at what exactly transpired today. Well, here's NVIDIA, and you can see the open and you can see the close on these moves. Take a look at something like AMD, and you can see the open and you can see that you're closing at the low of the day. So you're seeing a lot of these kinds of moves, right, over and over again that just aren't breaking out. Well, what about OKLO? Well, this is where it gets super interesting. Yes, these names definitely rallied today. And yes, they were definitely the driving force. And we're going to spend some time talking about these names. But companies with zero revenue and that are moving based upon tariff negotiations are not really leading stocks. The more of a speculative nature. You can't really say that this is going to lead the market forever when you have no revenue. Like it's just not realistic to think like that, right? It can keep going. It could grow into its valuation. It can do a lot of things. But you're moving up on a speculative basis. That's why you're moving up. And to say anything else is kind of delusional. It's not a function of, are uranium going to go higher? They might not. But when we start to look at what really rallied today, we're not going to go a lot higher because RGTI is squeezing shorts this morning. And this is the kind of thing that we have to look at. Now, we do have to spend some time talking about MPs of the world or some of these other names that are out there. 100% we have to look at these names. There's definitely names out there that are going to be worth our time to really take a look at and see how they're acting after hours. You see names like CRML and some of these others, AQMS. They're all moving after hours. They're all super giddy and they're all bouncing all over the place, right? And we're going to talk about them as from a trader's standpoint where they could go to, and I think that will add value there as well. But I think we have to look at the basics of just the overall market. Here's the VIX. The VIX did not implode. A matter of fact, if you take a look at the VIX, all you did was open up and stay in the same spot. You really did not go anywhere. And if you were really going to see this unwind, you would think that they'd be getting out of their put positions. They really didn't do that. So here's how I look at this market and these market moves, and I think that this makes the most sense. When you have something like this, you have to understand it is what it is. And now you're wedged in the middle of this bar. So there's a couple things to do, and you can do this on the stocks too. But the very first thing that I tend to do is just mark it off and drop fib levels, and then go, okay, where did we land today on any of those fib levels? And you can see that we're marked up to the 78, to the 61. 50 is not a fib, but what's so fascinating to me about from the high here, from that opening day to the low of that opening day, the 50% on the cash market, you couldn't close over it. Now you did on the ES, on the futures market, which you can use as a guide, but you didn't do that here. And this in and of itself, to me, always becomes the issue. If you're not going to do that here, then this becomes a problem, because that means that on the cash side, you didn't have net buyers, you had net sellers. So this is the very first demarcation line for me, the 66.57.84. That is the first thing that I think that you might want to watch tomorrow and make sure that you get above that, because right now you're not. I'm in the camp. I'll tell you where I'm in the camp, and I'm going to trade whatever happens, happens. We really didn't go anywhere today, and they squeezed the heck out of the shorts. And I think that that's pretty tantamount to what happened. I don't really think that anyone's really going to dispute that the new leaders are the companies with zero revenues, right? It doesn't mean you can't trade them, and guys in the community trade them, and they crushed it today. I got it. But you have to look at what's going on here, and you're not getting above that 50%. So that leads to a couple scenarios. And what we do is now we want to look through those scenarios once we see that. Because we can do this. Everybody can just kind of look and say, well, here's the 12, here's the 22, and here's the 55. We didn't break this. We couldn't get above the 22. There's the 12. And I want to spend time on the S&P because it's all really one big trade. But when we take a look at the 3 and the 5 and the 8, just on a regular chart, and we do not have after hours or pre-market on here, what is this really telling us? Well, here's the 8, here's the 5, and here's the 3. Okay, well, the 8's on top of the 5, and here's the 3. So whenever we flip, for those that haven't seen us use this, it's nothing too proprietary. It's just an 8 and a 5 and a 3, simple day moving average, and I overlay them on a 15-minute chart. Anybody can do this. I color code them because it helps me. Red, yellow, green. When red's on top, it means stop. It just means, hey, you're going to want to pause here, and you're going to want to look at the market, and you're going to want to take a break. It doesn't mean that I'm not whacking it around and trading in here. I'm definitely doing that. I did a lot of short-term trading today, and it was not an easy day to trade, in my opinion. But we'll get to that in a moment. But when I see this, it does put the brakes on. Now, if you start getting above these levels, great. That's good. But whenever we start flipping like this, you need to make sure that you're holding it. If you're not holding it, which you're not, that's something you really need to pay attention to. So the idea that the people that dumped here changed their mind because Bessig came on TV and said everything's fine, all is well, nothing to see here. No one's buying that, just quite frankly. But what did you really see as the day progressed? If you really looked at this, what did you really see? And I think it's pretty clear. You have your rally from retail, and then if you mark the retail rally over, then from there you rallied up a little bit, but by 3 o'clock you're down at this level, and then you could just see that the institutions are positioning themselves as well. So they are buying into the close. Now they could be buying their hedges, they could be doing all kinds of things, but they certainly didn't get rid of their puts, or the VIX would have dropped. And we just all saw the VIX at 19. So what does this mean for us, and what does it mean that you should do? Well, to me, this is super simple, because these kinds of patterns, they're not really bullish, and people think that they are, but they're really not. A matter of fact, I just want to be really clear. Like when you gapped down here, and everyone's like, oh man, like this is going to be a problem. And then we reversed that day. You reversed and closed over that level. You did not close inside this bar. And the same thing happened here when we had the September gap down. You gapped down and then you reversed and lifted. None of these previous levels, if you go and look at them, and that's how people are going to tie what's going on here, and I want to be really clear about this. All these previous levels, if you use those bodies and then you broke in here, all those bodies, they've reversed. And they from there, then you had your gaps up, and you went. That's not what you got today. What you got today was long bar down, and then we're in the middle, and on the cash basis, we can't close over the 50% line. And so what you tend to do is just look for that kind of scenario in the past and see what happens with it. If it's to the upside on a green bar, it tends to follow that. So for example, And we're spending a lot of time on this because it's really important because everything's patterns. So when you're up like this and you're coming across, you see how that's the red bar? So green, then red, and then green encompasses red. And then what do? You continue to follow and go higher, right? You might come back and retest the breakout just like you could here. But what we're looking for are real signals. And it's not common for this to happen. I want to be really clear about that. If you could go through these charts, and we're going to go back from 25, how often do you really see this pattern? Not very, not at all. What you tend to see on these bottoms is you bottom, you retest that bottom, and then you'll retest those highs like you did in here, and then maybe you'll hold, or maybe you'll retest the low, and then you'll figure out what you're going to be when you grow up. That's not what's happening here. And so what we do is we have this huge down bar, and then outside of that down bar, and you can go through this chart and see that they're just not there. It's not a common pattern. And there's a reason for that. Because if you were going to truly reverse, then you should have reversed. You should have had more follow through. And that's where I'm going. And that in and of itself, that's where our problem lies. So what do we do about this and how do we fix this? Well, it's pretty simple to me. If you wind up closing under this bar, you should have a negative bias. So if you close under 66.20 tomorrow, I'm going to have a negative bias on the market. All right? That's really where my head will be. If we undercut that, I'll have a negative bias. If we pop over and close over it, I would have a positive bias on the market and think that we could retest up here, and then I'd want to see how we act. But until we start seeing them buying real companies, I'm not trying to annoy people, but when you start buying real companies, like institutional level companies, that's when it gets interesting to me. Right now, we're just not seeing that. We're seeing some of it, but we're certainly not seeing a lot of it. We're seeing people out of position, and I'll show you a couple of them. But so that's what you want to see. Now, worst case scenario that could happen is you come over. Let's get rid of this for a second. You pop over tomorrow, and then I got to use something different. Let's get rid of that. We'll remove that. But where I'm going to go, and let's use this. Perfect. You pop over tomorrow, and then after you pop over tomorrow, then you reverse and you encompass that bar. That's your worst case scenario. That tells you, if you see that, that's going to tell you that you're going, well, obviously you're going to get it engulfing, but if you pop over that and then come back down through it, that's going to be a real problem for you. And that's going to be something that you're really going to want to pay attention to. And now what do we do about something like that? Well, watch when it pops over. And then if it takes out that low again of that high, I just get out of the way. See, I'm not in the camp here that everything's rosy, and I don't know that this is just from China, and it does look like things did get a little better when Besant spoke. But this is not what you would see. You would have seen, man, we got to get back in the market. So then you would go and do the simplest thing and look at the volume. Today's volume is not anywhere near commensurate what you had on the downside. It's not even close. And this wasn't even exhaustive volume. So then if we just take a look at the same thing here and take a look at the NDX for a second, what do you see? You see the same exact pattern where you're in the middle of the bar. So what we would do again is the simplest of things. We'll put the magnet on just to save us some time. And then from there, we can just drop this down and then kind of see where we are, right? All right, now watch this when we open this one up, because this was kind of interesting. If you're looking at this on the 50% line, you actually are testing and holding that 50% line on the NDX. So this is holding up better than the S&P, which is what you'd want to see. But once again, you're really from the open of the day, you didn't go anywhere. And I'll show you what I mean by that again. And I'd rather go through this so that you get it instead of trying to make it sound like this was something fantastic when it really wasn't. So you're up about 49 basis points on the day if you bought the open after you came down about 30 basis points. So your risk versus reward was completely skewed today. And then from that flip over, it tells you how much time you had to actually get in there to get your about 30 basis points. And from a risk reward standpoint, this trade made literally 0 cents. And you just kind of leveled off all day staying in that area, right? All right, so we go to a 4-hour, click on the RSI. And then if we just look at this for a second, all we did was just work off the oversold and go back to a neutral. So the question becomes, what do we do now? To me, it's starting to form an H. So down, gaps up, and then the last 4-hour bar is smaller than the first 4-hour bar, which tells me what? I had more buying when, right? Where'd you have more buying? On the first 4 hours than the last. Well, that always makes sense. Why? Because you don't have a full 4-hour bar, right, at the end of the day. So drop to the hourly and take a look and then go, okay, well, 9:30, the last hour, yeah, you did have a lot of buying in there. and we did hold this level. So we're going to want to watch that level tomorrow, that 50 basis or that 50% line, 24,701. And then we just want to see how we close. And then we're just going to go from there, right? That's all we're going to do. And then we're just going to watch that level. But same exact pattern for tomorrow. So when we're looking at this, and we'll clean it all off for a sec, drop it down, and then we'll clean it all off. Okay, so yep, here's the 12, we're above the 22, and here's the 55, and we never got near it. So if I flip this, I'm good, right? Everything will be great, and I don't have any worries in the world, right? Okay, I would watch this like a hawk tomorrow, because if you start cracking tomorrow, it's definitely going to be an issue. And to me, all this did was just squeeze shorts. If this was something that you were going to have massive follow through on, the volume would have been much greater, and you would have had a much stronger move after the gap up. You wouldn't have had basis points here. And that's the thing that people have to realize. You're fighting literally for like 40 basis points on the NDX today. Best case scenario versus the gap up. That's telling you a lot. And I think that's really important. And that's why I spent so much time on it. And it's not just there, but wait, there's more. You see it on the stocks. Look at all the selling in the stocks. But this supposedly is supposed to make me feel warm and fuzzy. I didn't even have average volume on semis today. And then you go and take a look at semis in general. Here's AMD on the day. Opens up. Where's it do? Closes near the low of the day, right? You couldn't even really rally. And it wasn't just AMD that was like that. It was some of the secondary names as well. Like RMBS, okay, you opened up and you sat there. How about NVIDIA? Well, NVIDIA stayed in the 30 basis point range all day. I mean, it was literally 30 cents or something like that, rather, from open to close. And that's telling you that you have massive, massive uncertainty. And that's the point that I'm trying to get at. It doesn't mean that you can't trade it. So let me just be really clear about this. There were some really great trades today. It's just a very difficult market to do them in. So like, for example, this was something I put out in the community. And then as soon as it reversed on me, I didn't even want to deal with it. But you could see like these kinds of levels, these kinds of areas that you're setting and you're rallying up, you're retesting, rallying up, retesting, and then you're lifting. And that's pretty standard in this kind of market, that if you see this kind of behavior, you think you got a shot at it, you might, especially after the second test. Not the first one, but the second one, yeah, you usually have a pretty good shot at it and you're using something like that as your stop. And something like that worked out absolutely, perfectly today from a trading standpoint. And that particular pattern, you'll note, because you'll see it in a lot of different places. It won't matter. It really won't matter what it is, but it's the second tap that usually does it. First one, no. That second one, all right. And then you go through, this becomes your stop, or even second time you're going to try it and that became your stop. Either way, this pattern works. But what are you really making there, right? If you're doing this and you're looking at the risk reward, yep, you got about 2-to-1 there. And on Tesla, you're about 2-to-1 as well. So the trade's there. I mean, you're looking at this and getting in at like 28 and change, and your stop's down here at 27. Yeah, you got more than 2-to-1 there. I mean, you actually had a really good trade if you were able to ride that and stay with it. But then at the end of the day, a lot of these moves are so wild, it's really hard. So that's going to take us into some of these other names that I think we should cover and spend some time on, like OKLO. I don't know how this ends. I'm just going to tell you that I know it ends, and I know it ends ugly. And this is from somebody that's been in this name and traded this name. But this stuff, when you start doing this, where it's just like, oh no, every day we're going to go up 40, 50 points. It's literally just what tends to happen here is it just starts getting to the point of who's going to be left when the music stops. And it doesn't mean that it's not a good company. It doesn't mean that it's not going to be around forever. But this is very clearly just a short squeeze. It's all that it is. RGTI did not invent air today, right? It just didn't. So what you have is you have a bunch of people that said, I came at the high, took out the high, I closed at the low of the day. That's my pattern, because that's a pattern trader's dream right there. And then all of a sudden they're going to gap you up because Bassett says, don't worry guys, I got you. Everything's going to be great. And then they just like, oh boy, we have a problem. And of course they have a problem. You can see what happened there. Not saying that they can't keep going, but you have to understand that that is not a driving force to the market. In other words, that's not going to keep the market afloat. Now, I just want to put this in perspective. In front of you is 40 different sectors. And what I've done is I've moved those 40 sectors to about that 945 area, got rid of the gap up to show you this. You have the pot names, oil, and crypto names there that led. After that, it was gold and IWM. If you really look at these sectors here, this one was up 60 basis points. This one was up 60 basis points, 90 basis points, things like that. After those levels, right? Really important to get this, guys. And the reason that that's so important to understand, from my standpoint, why it's important to understand is we didn't go anywhere. So that means that we really didn't put a lot of capital to work. So what do you need to see to tell you that, hey, this might be coming to an end? And to me, it's pretty simple. So if I go and take a look at the VIX, let's go to this and we'll go to a plain chart. If I go and take a look at the VIX and I divide the VIX by the short-term VIX, you're going to get these peaks, and I'll show you them. So here's one right here, and that's going to be the April. So you really want to get up to that level. Now, you'll have other ones as well, and I just want to extend this out. But what tends to happen here is you want the VIX catching up to the shorter term VIX. And when that tends to happen, you tend to get some of these peaks. So in April, when that finally kicked in, that was the high. The other thing that you can do is you can start watching VXN. So VXN is the Nasdaq volatility. And Nasdaq volatility, just to put this in perspective, you would have to go back to look at May 23rd. You're not even close to that yet. If you were thinking that this could fall apart like April, you're nowhere near that. If you go back to August 5th and you're expecting something like that, you're nowhere near that. Do we have to get there? Does that have to happen? No, it doesn't have to happen. But this does not end usually, and I'm not going to even say usually, this does not end with this. It would absolutely have imploded today, and that's not what we got. So the first thing that you would be looking for tomorrow, if I had to give you a signal and tell you what I would be looking for, I would see if you take out the lower low of the VIX tomorrow. That would be the first thing I would look at and say, okay, did we take out 1861? And you might. And if you do, then the chances of a retrace of the market are greater. In other words, yeah, we might retrace to the top of this, and then we have to see how we act there. But that's what I would start with, and then see how we unwind. That is it.